There is no shortage of opinions on cryptocurrencies, from one extreme to the other. Some think it's fool's gold, others think it's the future of money. The truth is probably somewhere in the middle. This isn't a crash course on Bitcoin mechanics or price prediction. It's an analysis of where, if anywhere, cryptocurrency fits into your portfolio, into a thoughtful investing plan. Here's our promise of what we try to teach here today in this video. What crypto was designed to solve and why it's resonated and why people have latched onto this idea. How institutional adoption has changed its character, and lastly, where it might or might not fit in your portfolio. At New Harbor, we've helped clients navigate volatile markets for over 20 years. We've watched crypto evolve from a fringe experiment to a trillion-dollar asset class that now demands serious attention. So that's why we're talking about it here today. Crypto may have started as a rebellion, but its integration into Wall Street has fundamentally changed what it is, and investors who still treat Bitcoin as digital gold or a fringe asset are ignoring a new reality that it now moves with the very risk assets it's supposed to protect against. It's become mainstream, in other words. Let's talk about what crypto was meant to be. Crypto started in the ashes, or from the ashes, of the 2008-2009 great financial crisis. It was a response to the fact that people had their trust broken in the financial system. Remember, the bankers and the financial and Wall Street, nobody went to jail and everything had to be bailed out. People were really upset by that. And so Bitcoin came out of that distrust, out of that feeling of distrust. Satoshi Nakamoto had a vision. That vision was peer-to-peer money, free of governmental control, free of inflation, free of censorship. Basically, it was meant to be a solution to the problem of fiat money, because I think we've all been taught, and it's actually continued to be this way, that central bankers and governments can't be trusted to print money out of thin air. And so Satoshi Nakamoto had this vision, and he tried to correct this with Bitcoin. It's easy to see why Bitcoin was so attractive. First of all, it had this characteristic of scarcity. Now think about diamonds or gold or prized real estate, collectible coins. Anything that's scarce holds its value well. Why? Because you can't just snap your fingers and make it. It takes effort and energy and focus to create something of value, and that's what Bitcoin has, and that's what it was thought to have, and that's how it was designed to have this scarcity. There's 21 million coins maximum that Bitcoin can ever have, and with each halving, it doesn't double the number of Bitcoins, but it basically doubles the amount of effort that's required to mine a Bitcoin. So each halving, the same 21 million coins exists, but the process is slowed down. The efficiency is halved, in other words. And so therefore, it's harder and harder to mine the same Bitcoin. So anything of value that's going to have lasting value has to have this concept of scarcity. Also, Bitcoin has transparency. The real cool thing about Bitcoin and crypto in general is that it's a public ledger that anyone can see. It is not hidden. There's no single overseer, no single authority that can tell you how to spend your money or that can control or basically control how money is spent. It's completely open to everybody. Now, it's supposed to be anonymous. You can't tell exactly who's transacting, but the actual transactions are public for anybody to see. And for the idealistic people out there, it has an ideological draw. And I think a lot of us feel this way. Financial independence, just completely outside of the system. It's a hedge against government outreach, or overreach, I should say, and monetary debasement. So Bitcoin is the prototypical debasement trade. There's other things in that camp too, like gold and silver, all precious metals, real estate, things like that. But Bitcoin and crypto in general was thought to be for everybody, with basically very little friction or transaction costs. You could spend it anywhere in the world. You could literally take it with you anywhere in the world. If you can simply remember the password, which is essentially 12 words. If you can remember those and not write them down, you can go anywhere in the world and take your money with you. The only thing that can do that was Bitcoin. Because of all of this, Bitcoin has seen explosive growth over the last 10 to 15 years. It's gone from a niche tech experiment to a trillion-dollar asset class over the last decade and a half. Major advocates like MicroStrategies, now it's called Strategy, Michael Saylor, and Twitter's Jack Dorsey have championed digital gold all along the way. And these guys have some clout and a large following, and it's helped with Main Street acceptance and adoption. For many of these people, Bitcoin wasn't just an investment, it was a rebellion. And again, this is because of the 2008-2009 financial crisis. It's a rebellion for a lot of these people. And it's easy to see why so many think that this could reshape finance, and indeed it has been reshaping finance. Let's take a look at a chart of gold versus Bitcoin. For new adopters and for younger people in general, they think that Bitcoin is superior to gold, that gold is for old people and Bitcoin is for young people. Well, I don't really see why you have to have one or the other. You could have both. And frankly, I don't really envision a world that Bitcoin does really well and gold doesn't. You can see here that for a lot of years, at the early part of this chart, or the first half of this chart, gold, which is the orange line here, had more of a sideways move. Take a look at the blue line, which is Bitcoin. Back here in the mid part of the chart, Bitcoin had a big move higher, all while gold wasn't really going up that much. So that there's a lot of gold and silver people that were invested in the class that were impatient. They say, well, when is gold going to have its day? And frankly, I was one of those people too. The move that we've seen in gold and silver over the last year and a half or 2 years has actually caused gold to catch up. You can take a look at the right side of the curve. And frankly, over this period of time, which is 10 years, gold has finally caught up. You needed patience, but finally we've arrived at a point where gold and Bitcoin have had roughly the same trajectory over this period of time. If you take a look at this chart, it actually shows that Bitcoin has been a lot more volatile than the S&P 500 and gold over the period of time. So here's one knock about Bitcoin. Even though it has all of the wonderful characteristics earlier that I mentioned, it has had 3 separate, more than 50% declines in the last 10 years. Frankly, I think that the S&P 500 will also have a 50% decline sometime soon. I don't think that gold's going to have a 50% decline, but certainly cannot rule it out. All I really want you to see in this chart is that there's been 3 big price declines in Bitcoin in the last 10 years. So something to be wary about is the risk that's inherent in Bitcoin. Let's talk about the institutional adoption that's now happened as we're 15 years or so into this story. There's been major institutional adoption and acceptance. In just the last year and a half or so, we've had a major launch of ETFs by BlackRock, Fidelity, Van Eck. All of the big competitors now have a Bitcoin ETF. So this, I would say that Wall Street's entry into this space is a big positive mark for the legitimacy of Bitcoin and other cryptos. And also the regulators have done some work. There's been a major US policy shift. There's been crypto custody frameworks that have been hammered out. The CFTC and the SEC have passed legislation and have jurisdiction over these assets. And so they've clarified their stance. So this is all part of the mainstream integration. The Genius Act has recently come out and basically embraced stablecoin. My partner John recently did a video on the Genius Act and talked about stablecoin and why it's important. You might want to check out that video. The link is below. So what's the trade-offs of all of this? What's the trade-offs of the mainstream nature of Bitcoin, of the regulators coming in? Well, really, I think we're trading off convenience in exchange for safety of oversight. But that's got to happen for any major asset. So I think it's a good thing overall, but that's not to say that there hasn't been some trade-offs or some give back because of that. So here's the ironic thing. The stable coins and tokenized assets have become on-ramps to traditional finance. They become more mainstream. They're like stocks, bonds, gold, silver, and they're becoming more and more like that. Institutions are amassing large positions here, and like usual, anytime the institutions and the big players get in, this concentrates control in the very entities that crypto is meant to bypass. Remember I said earlier this was a rebellion against Wall Street? This is for the little person. This is for the everyday person. It is in a way still, but here's a fact that I find shocking. The top 1% of addresses, i.e. owners, own over 90% of the Bitcoin. So it's like the early adopters, the people that caught on early, still have almost all of the wealth. And that, unfortunately, mimics the real world with traditional assets. So it's not really everyone's equal and everyone benefits. It's still very, very concentrated. And also there's a meme coin problem out there. There's thousands of other cryptocurrencies that they claim to solve Bitcoin's mission, and they claim to complete Bitcoin's mission, but so many of these are just purely speculative or they're jokes. And so it's hard to tell what's real. Everything's wrapped up in this massive bubble that we're in, this huge liquidity, central banking bubble, everything all up. We're living through the everything bubble, and that affects the cryptos too. It's pretty clear that Bitcoin has now become a more legitimate or very legitimate store of value. Some of the others as well, like Ripple and Ethereum, etc. But there's thousands of others. How is one supposed to know what's worth looking at or taking risk? I don't think there's any way to know. And I don't think we will really know until there's some kind of reset or big drop in the financial system. And we can find out who the fakers are, frankly, when the tide goes out. You know, they say, you know who's swimming naked when the tide goes out. I'm afraid that's been more true now than ever, particularly in the last 25 years when we've had big booms and busts. So in a bust, you find out what's real and what isn't. And so I'm a little bit afraid that we're going to find out what isn't real the next time we have a big contraction. So if you're going to play in the space, I'd stay in the more popular ones and I'd limit your exposure. In summary, crypto is no longer the outsider. It's mainstream. It's been invited inside. But when that happens, it stops being about independence and it's about integration. Integration into normalcy, into institutional adoption. It becomes mainstream. And that's a good thing and a bad thing, as I tried to point out. So what do you do about all this? Bitcoin and other cryptos belong in a speculative portion of your portfolio. They really shouldn't be a mainstream portfolio asset. They should not be in my opinion, should not be a core holding. Because Bitcoin or other cryptos, they could fall by half or two-thirds or even 90%. And frankly, I don't think I could say that that can happen. And if it did happen, I'm not sure I could explain why. I think I could explain why in the stock market, being where the valuations are. Maybe even in the gold market, you could tie gold to the cost of production. Gold, for instance, doesn't fall often or long below the cost of producing it. And I suppose you could make the similar analogy about Bitcoin and the energy required to mine it. But still, my point is that it's speculative. So it belongs in a speculative part of your portfolio. Its potential role as a hedge against fiat debasement, I have to acknowledge, is real. So gold, silver, Bitcoin, I kind of view them all as real assets. And indeed, here at New Harbor, we put those in the same category, gold and monetary assets. When we look at our model, we have an allocation of gold and monetary assets. And that would be where we put the Bitcoin. We don't have crypto right now in our model, but if we did, and we might in the future, that's how we would look at it. But also in there is silver, which is currently in our model right now, and gold mining stocks. So it is the anti-debasement trade, and I think it's legitimate in that role. And again, size matters. Size correctly. I can't give specific recommendations because I'm not talking directly to you individually, but in my mind, it should not have a large position. It should be low single digits percent perhaps in your portfolio. If you'd like to talk about your specific situation so that we can give you some advice directly, please reach out. We'd be happy to talk with you and get to understand you personally and hopefully give you some advice on that. I'd like to just start to wrap up here and talk about some pitfalls and what you could potentially avoid, what you should avoid. Don't chase hype. Don't chase returns. Don't run after the hot coin of the moment. Just keep a level head and an even keel. Don't confuse innovation with speculation. There's a lot of people wrapped up in speculation right now in this market, and it's understandable because the market's been hot. The gold and silver market has been very hot lately, and a lot of people that we talk to want even more exposure, and it's so easy to do. It's only through decades of experience and personal experience that I can say, take a deep breath. Some of these markets, for instance, the metals markets, I believe are going higher over time, but it's getting really hot in the trade. And so just don't go head over heels. Just don't confuse innovation with speculation. And it can help to talk to somebody impartial like us. Again, we're happy to chat with you if you'd like to talk. We have no trouble speaking directly and giving impartial advice. And lastly, there's some platform risk with all of these things, all of these cryptos. There's unregulated exchanges. There's been some custody issues in the past. There's been some outright fraud in the past. And this is normal as an asset becomes more mature. It goes from infancy to maturity. You're going to have some problems along the way. So just be aware of that. And here's the distinction. Even if Bitcoin succeeds long term, most crypto projects will fail. That's likely to be the case in the future. The key is separating signal from the noise, separating what's real from what isn't real. And that's very hard in the crypto space because it's an intangible, complete intangible. Again, I think that the major coins have proven themselves and their legitimacy and they're good stores of value, but a lot of them aren't, and we don't even know which ones those are yet. So don't go too heavy into these things. Again, crypto began as a rebellion against the system. Now it's becoming part of the system. It's becoming more normal. Whether that's progress or compromise depends upon you and what's personally right for you. But either way, it's how we think about the money, how we think about the economy, how we think about investing. So it's real and it's here to stay. At New Harbor, we believe crypto can have a place in your portfolio, but only when it's sized appropriately, only when you think about it correctly, and only when you understand the risk. So if you want to talk about this and how it might fit into your balanced strategy, risk-focused strategy, please reach out to us here at New Harbor. The link is down below. Thanks for tuning in today. I'm Mike Preston at New Harbor Financial. Really appreciate you checking us out. And until next time, we'll see you soon.